you don't mind introducing yourself and tell us a little bit about you.
Oh, sure thing. So I have a bachelor's degree from New Mexico State University and in finance specifically. And I was CFO of an oil and gas company before I started in insurance. Took care of a lot of the procurement of insurance, and it gave me an interest in the field. And so started in 2003 from scratch and built an agency over in Keller, Texas. Expanded to Irving and some other areas in the Metroplex. Serve the whole state now. My staff and I have ranked in the top 100 in out of 15,000 agents for Farmers Insurance in probably the last 10 years consistently. So we've become established, and we pride ourselves with maybe more of a consultative approach to insurance rather than just a paper approach. So. Real proud of my team over there, and they're trucking along, and we really appreciate you having us on.
It's my pleasure. I appreciate you taking the time. So, a couple of things that I wanted to ask you that seems to be, being in the mortgage business, I have the luxury of working with just about every insurance company that's out there. The buyers or clients will come and they'll either have a relationship with someone like yourself, or maybe they're a veteran and they're going with USAA, or but I've had the pleasure, or sometimes the not so good pleasure, of working with so many of the different insurance companies that are out there. Now, what I can tell you is that they are not created equal. That is for sure. They are certainly not created equal. So, one of the things that I've noticed in the last year and a half is that rates are really, really jumping. So, can you kind of give us a little idea or explanation as to why rates jump? They've been jumping from carriers in Texas. How this is affected and why it gets affected this way?
Sure. So, back to maybe insurance 101, right? And a lot of agents or even clerks, maybe at call centers, don't really speak to this. There's a couple ways insurance companies make money. Typically, where they make the bulk of their money is going to be through the interest that they earn off their surplus that they hold. Companies are required to hold surplus in case of catastrophic loss, and each state varies with how much surplus we're supposed to retain. But a bulk of the insurance company's income is going to come off of investing that surplus and earning interest basically off that. And I'm simplifying them, maybe oversimplifying this just a little bit, but the other area where they earn money is through premium, and that's where the consumers feel it, right? The consumers are charged a premium, and they take money in, and they hope to retain as much as possible of that dollar that they bring in. Historically, 10 years back, my agency alone, one of the top agencies with that brand, was not profitable any of those 10 years. And you say, well, wait a minute, Brett, you took in $1
wow.
and you paid out more than $1. And the answer is yes. And if you kind of take the approach of, well, my rates went up, but I didn't file a claim. Completely understand that, because if we isolate that one policy, sure, the profitability of that one policy might be to the black or in the black, so to speak, rather than in the red. However, insurance doesn't work that way. Insurance is a pool, right? And we all subscribe to the pool. And if the pool is unprofitable, then the pool shares in that profitability or being unprofitable. And so if you look back over the last couple of years, we've had just a bad run. And I say couple of years, it's stretching. It's going way back. We've had astronomical hail claims, freeze claims 2 years in a row. We 2 years ago, we had a really, really bad freeze. And then last year,
I was affected by that, as you know.
So, I know that's kind of a long answer to a short question, but if you really start diving into it, it's usually not one specific brand. It's usually the industry as a whole feels it. Those who carry more market share feel it a little bit more than those who don't carry as much market share, obviously. And so I feel that we're going to continue to trend upward until we get a handle on things. And there's other there's other factors that go into this. The big X factor is weather, but There's other factors that go into that, and it could be the waiver of deductibles. They've been trying to get a handle on that for years and years and years, but the practice
Well,
continues.
that's a great topic. I know here in Texas, a couple of years ago, I believe they changed the rules or the laws about deductibles, and how it pertains to the companies themselves or even the customer.
Mm-hmm.
So, and in the past, we're used to having roofers come up and say, "Hey, we'll waive your deductible, and you won't have to pay anything out of pocket." And all that stuff, and that rule changed. So, you know, give us a little bit of insight of how that's been affected, and what are the ramifications of something like that.
Yeah, so the rule a few years back was actually, there's an unwritten rule that you weren't supposed to do it because insurance is a contract, right? You purchase a policy, which is a contract, and it says, look, we'll pay our part, you pay your part, and your part as a consumer is the deductible. But then roofers come along and they say, well, a lot of people can't afford their deductible, or and I'm not trying to pick on any one client, but the practice was there, and so what the state did is they tried to curb that process a little, and they tried to say, hey, well, let's stop it, and it's against the law technically for a roofer to waive a deductible, and the prosecution of that would fall on the roofer, not the consumer. And so we know, you and I both know, that no law is effective unless there's an enforcement of that law. And,
Right.
and being in the business and having many clients, I can only give you my opinion. And I please, I want to be very clear that this is my opinion and not fact. But I just don't see it being enforced, and I don't see it being effective unless we enforce that. What I do know, if you start doing math, and I know you well, you do a lot of math, and you do a lot of math every day. But if you just took maybe 50,000 people, and the average deductible is $3,000, I mean, you're going to come up with a very big number that is affecting all of us when it comes to when it comes to insurance premiums. Basically, in short, the insurance companies are overpaying for roofs when that's going to directly affect rates in the end, because we go back to that: how much did we pay out versus how much did we take in? And so, if a roofer, I'll just send this out for customers. If a roofer says, "Hey, I'm going to waive your deductible," the next question from the consumer needs to be, okay, what part of my roof are you not going to do, or are you simply taking that profit, right? What's happening here? Because any good business practice, it's got to come from somewhere, right? And so,
right, and that's what I was going to mention, is that you can't, if you're not getting all the money to do all the work, then obviously there's something that is being subtracted from that, right? And either the roofer is making a decision to do that on their own and giving you substandard work, right? Not really informing you of what they're doing, or you're collectively making that decision together to say, hey, look, I'm not going to put gutters. I know the insurance covered my gutters. I'm not going to put gutters. I can live with these gutters, right? But you still take the money and you cover the deductible or whatever it may be by doing that. But the insurance companies themselves, they paid for new gutters,
right?
So I mean, there could be a legal penalty there to the homeowner for not doing the work that the insurance paid for. Is that correct?
Well, yeah. What I see in that is maybe the next time they go and file a claim, that it prohibits them from filing the gutters the second time, and because of pre-existing damage. And it's very easy on a roof to determine when a hail hit occurred. There's weathering of materials, and there's all types of ways they can determine, when hail hit A and hail hit B happen. And so it's going to be detrimental to the consumer if they participate in such things long term, I would say. I will say this, that if the gutters were paid for, most insurance companies, and most good ones, larger ones, and ones who are trying to help control these costs, are requiring these roofers and consumers to prove out the deductible being paid. And so the question then would come up, if a deductible were waived, how did you prove to the insurance company that it was paid? And I want to be very cautious about what I say, because it could be offensive to some people. But in reality,
Right.
if the insurance company believes that the deductible was paid and it was not, there's a lot of gray area there. And yes,
Right.
a lot of question marks would be brought up, towards the consumer and the roofer at that point. So I would just caution again, if someone says, "Hey, I'll waive your deductible," lots of questions need to follow that comment. How are you going to do it? Why do you want to do that? And what's going to be missing in the end game?
Right. Okay.
Yeah.
Well, there's something, you and I have had lots of conversations over the years about, different things. And one of the conversations that we've had is, the difference between mortgage, or not mortgage companies, I'm sorry, insurance companies. But, you see a lot of these ads on TV, the Geico ad with the lizard and progressives. And, they've got some, and what's the Allstate, the guy that's always in an accident or something,
Yeah. Yeah.
that guy, whoever does
Yeah.
whatever. And they all have like a little funny twist, and they're entertaining to watch. They're almost like Super Bowl commercials, right? They're
Right.
entertaining, there's no
Right.
doubt. However, that's really just because they're spending all this money on these ads doesn't mean
Mhm.
that they're necessarily a top tier or that great of an insurance company. And a lot of things, what I see as a mortgage guy, when these policies come over, that some of the insurance, or the coverages are lacking, or they're not explained really great to the customer. So can you give us a little insight on how some of these ads are giving the wrong message,
Sure.
that we're watching, that the normal consumers watching? For instance, I'll share something with you. You see a tree that falls, right, and you automatically think, well, that's covered by insurance, and a tree falling is not necessarily covered by insurance, right?
Sure.
Okay.
Yeah. Yeah.
Yeah.
And you bring up a good point in the funny part, because I will tell you this: usually, if not all the time, when I get a claim call or my staff gets a claim call, nobody's laughing, right? Claims are not
Right.
funny to people. Claims, are saying in our office is, bad things happen to good people, right? And we send this wrong message up front, trying to get your attention and having funny ads. But insurance is not funny. And I would put a big number out there. If I were guessing, I would say 80% of the time, especially on homeowners insurance in Texas, people have no idea what they're buying. They're buying a piece of paper, and in their mind, they're buying peace of mind and coverage, but they're really not, because, like you said, something is missing off of that sales process, and it's usually clerk versus consultant, maybe. If I can kind of lead into maybe call center type
Sure.
approach to insurance, the thing that's missing is accountability in the call center approach, because the turnover rate in a call center is usually 9 months to 18 months. If I bought from Eddy in January, and getting a hold of Eddy in August when the claim happens, it's virtually impossible in a call center environment. But when you're buying from a local agent, you bought from him in January and you have a problem in August, you can walk into their office in August and hold them accountable to what they sold you. So there's a lot more disclosure when you're dealing with a local agency, in a local liaison, than if you're calling, Phoenix, Arizona, or Los Angeles, California, to book your insurance policy. And there's a lot less personal responsibility there, because the clerk type mentality is churn, 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 and
Right.
it's moving paper. Where if you're buying from a local agent, it's more of a relationship building process and consultative approach, like I spoke of in my introduction about my agency. So yes, I mean, you struck one of my heart chords, Eddy, when you talk about call center and ads versus, local agent and insurance professional, right? It'd be no different than if I went online and bought my own mortgage without your assistance. I'd have a hard time getting all the right answers, and I'd wind up with a sheet of paper, and then I'd wonder why my mortgage rate jumped in 2 years on my 2-year adjustable rate mortgage, and shocked the heck out of me because I had no idea what I was doing. Right? We need guidance. It's no different than, your business, my business, your doctor, your dentist. These things that require licenses. We need a little bit more guidance than a 15-minute phone call. And I hate to pick on that brand, but usually a good insurance portfolio takes 1 to 2 hours to build. And these ads really are imprinting our brains with the wrong message of you're supposed to make your insurance as cheap as possible. People pay me $50 extra a month all the time, but they know I'm a phone call away, and I usually have the answers to the questions or issues that they have. If not, we find them right away, and they get callbacks and personal attention, and I think there's value there, right? I think
there's a huge value in that. I mean, just in my business and your business, there, because we don't know, right? I mean, you've got, like you said, you're educated in your field. You know the inside out like the back of your hand. I know my field like it's the back of my hand. But I don't care what type of degree somebody has. If you've never bought a home before, it's foreign to them, right? The terminology, right, all of that stuff. And the same with, I've bought and sold several homes in my life. I'm in this business. I've done several things, and I'll tell you, insurance, it's constantly confusing. And what I can tell you that is important to me is I will never, ever pick up the phone and do business with a call center, because I need to have a relationship with my agent. I want to get to know that agent. I want to have a relationship because I want to believe that what they're telling me is true, right? And I want them to guide me through the right process of, in my situation, using you guys. Sometimes people are in a higher realm situation where they may be exposed, and you'll say, you know what, I think you need to have an umbrella policy attached to this, because what if something happens? It's not really an attempt to get more policies or make more money. Umbrella policies is just an example of something. But to be able to have that relationship, to pick up the phone and say, hey, look, I'm having a problem, Mr. or Mrs. Agent, I'm having an issue, I don't really know what to do. And it could be with the roof, and this is something that has happened many a times. And I don't know if it's the right thing or the wrong thing, but this is how I guide people, right? A hailstorm comes through, which is, we've got 2 homes in Texas, right? One that's been damaged by hail and one that's going to be damaged by hail. Right.
So that's exactly right.
And I think one of the biggest mistakes that people make, and they don't really have a choice, like if they're with a call center type of insurance company, is the first thing that they do is call their insurance company and say, hey, look, a hailstorm came through. I want to see if I need a new roof. Well, what's the first thing that insurance company does? They file a claim.
Yeah.
Right? They file a claim. Now, for me, I'm going to pick up the phone and I'm going to call Brett and say, hey, Brett, a hailstorm came through. It was hitting pretty hard last night. You're going to probably advise me, hey, Eddie, call your roofer guy and have him come out and take a look at it. And then call me back and let me know what they say before we go ahead and file a claim. Let a roofing professional go out there and advise you of what they feel and think before we go ahead and start all this paperwork, which is a huge difference and a benefit to the consumer to guide them that way. Would you agree?
I would absolutely agree. And not just, you just picked the roof claim as an example, but any claim really, because what if the claim is just your fence and the fence blows down and your deductible doesn't meet, or the claim doesn't meet your deductible? Do you really want to ding yourself with a claim? And so a good agent is going to walk you through that, where, like you said, if you call the call center, they're instructed to key that claim. And insurance companies, all different kinds of insurance companies, rate policies in different ways. And I just know over 20 years of doing this, more claims is not better. We want to make sure that we keep our claims history as clean as possible, especially if it's a $0 claim, right? And frequency shows the propensity higher likely propensity to file a claim in the future. So yeah, let's kind of maybe tap the brake a little bit, kind of reel back and go, hey, does this one sound like it's something? Auto claims are the same way. I have people call me all the time. What's my auto deductible? $750, $500. Oh, I had a little $250 problem. Yeah, I'm sorry, that doesn't meet your deductible. Covered, it's covered, but it just didn't meet your deductible. And I've got to be very, very clear in my communication with clients in not covered versus covered, because there are covered claims that don't meet people's deductibles, but it feels like it's not covered. And then they feel like, well, what do I have insurance for if I can't file anything? And so what we do is we educate them on what a deductible is. And it's basically your self-insurance portion. It's how much risk you're willing to retain yourself, because insurance is a transfer of risk, and you've got to determine how much risk you want to transfer from your personal to your insurance company. And if you have a $500 deductible, you're transferring a lot more risk. If you have a $2,500 deductible on your auto, which is possible, you're transferring less risk, and you're retaining some of that risk. So there's a lot to talk about there. But again, you're going to get a better experience if you have a brick and mortar local agent that you can, spend some time with, and they can educate you and be, and have a healthy insurance portfolio is kind of the way we say it, right?
Right.
It's a promise. You're buying a promise. Do you really know what the promise entails? We're not selling pieces of paper, but there are many out there, Eddie, that sell pieces of paper. And
well, I know that they do. And there's another topic that is near and dear to my heart. Maybe you can kind of give a little bit of clarity on it. I've owned several businesses in the past, construction. I've been part of a custom home building company. I've had a concrete company. I've had a roofing company. I've had interest in all of these things where I've had boots on the ground and people out in the field. And I will tell you that, insurance companies are not equal. They're just not. There are some that have a huge reputation in the contractor world for not wanting to pay, or not wanting to pay what they should. And, as they determine, we as the consumer, we sit back and we think, oh, well, I've got Farmers, or I've got Allstate, or I've got AAA, or whatever it may be. And what they don't know is what it is that particular insurance company classifies on a roof that would be a loss, right? How many impacts per square that it takes to determine whether or not it's a total loss.
Right.
And I know that, that's a very wide range as to what that may be. So, without naming any companies, because I know you don't want to get specific on that. I mean, I would love to, because there's some that are near and dear to me that I'd like to throw out there, but I'm not going to. But anyway, with that being said, could you kind of explain that and kind of, the difference between these impacts and what it takes?
Yeah. And, first and foremost, you hit it right on the head. Many insurance companies sell many different types of products, and I alluded to that earlier in our conversation. Farmers alone, I have 3 different types of home products that I can sell. I have an all risk policy, which is very, very hard to match, and very few in the industry can match it. And I can speak to farmers because I represent farmers, right? And so there are some other companies out there that do have all risk, but they're few and far between. And those are usually
tell us what all risk means for the people that may be watching this that don't really know what that means as all risk.
Sure. So there's generally 2. There can be other types of policies, but the majority of policies are one of 2 types, and that's all risk or named perils. All risk meaning everything is covered except the exclusions, which is very easy to read that policy, because you just simply move to the exclusion page and you can read what's not included. And typically what's not included or what's not included in any policy, which are like flood, earthquake or earth movement, those types of things. And so it's a very consistent policy. And then there's named perils, which means the insurance company has to name what's covered. And usually when they're naming what's covered, they're also limiting what's covered. So in other words, I'll give you one good example between an all risk and a named perils. And I sell both types of policies in my agency. All risk would be on a water claim, being a discharge of water, similar to the claim you had, where water was discharged quickly into the house through a broken pipe. It's included in our policy because it's not excluded, because we have an all risk policy, right? And there's no limit on that. So, Eddie, if you'd have turned in a $250,000 claim, we would have paid a $250,000 claim on that all risk policy. If I had sold you our named perils policy, we would have had to name the accidental discharge of water, right? And so it would have also come with a limit. It would have come with a limit like $5,000 or $10,000 or $50,000. And sometimes when they name the peril or name the coverage, it will have no limit on it. It will, but it needs to specifically say it has no limit up to the dwelling amount. And so that's just one example. There are many, many, many hundreds of examples inside policies. I like reading an all risk policy because it's easy to read. It's very easy to translate that to a consumer. And they generally cost more because they cover more. And so I have customers leave me all the time, and they will say, well, so-and-so found me a better policy and it's cheaper. And I say, but it's not better. Oh, he says it's the same. And it's either that the other party doesn't really understand insurance themselves and understand the types of policies, or they're just not disclosing what's going on and they're taking the customer backwards in coverage. But in Texas, I would say on a $300,000, $400,000 house, an all risk policy is generally going to run $300 to $600 more per year. But it's also going to contain a lot more for the customer. And there's value in that. You just have to get with somebody and sit down and educate yourself on what it is that you're actually buying, because most agents will put both policies side by side and just sell the cheaper one to the consumer because it's just the easier process.
Yeah, and that sounds great all the way up until you have a pipe that breaks in the wall, floods your house, and you call your agent and your agent says, well, you've only got $5,000 worth of coverage, but you've got $50,000 worth of damage.
Yeah.
And I know several people that 2 years ago when we had that storm, that happened to. Some of my friends that are general contractors that were dealing with clients that they didn't know what they were going to do, Brett. They were at a loss because it only covered $5,000 or $10,000, and and their entire.
It felt good at the beginning, right? It felt real good when they bought it. It felt real good at the front end, and so I always say that if it looks like a better deal, you always have to give it a second look, because when something's cheaper, it's usually cheaper for a reason, right?
Right.
And so if you take that and you apply it to anything else we buy, shoes or cars or any durable item that you might buy in your household, you would say, well, that was a lot cheaper, and you would start to question why it's cheaper, right? And so I would say do the same about your insurance, even though it's a piece of paper, because you can really give it the test of how durable it is by asking your insurance agent a lot of questions, or even your clerk if you're working through the call center environment, and just ask them questions about, what would happen? What would you do if this happened? And what would you pay if this happened? And you can pry it out of them sometimes, and it starts to expose why that insurance policy is so cheap sometimes.
Right.
Yeah.
And if somebody wants to knowingly take that risk, that's fine. My biggest concern is, people that come to me, they don't really understand that stuff, and they may get themselves into policies that when they do have to make that phone call, they're not covered,
Right.
And that's what I always try to avoid with the clients that I have. But going back to those impacts, do you off the top of your head know like what Farmer's thing is, how many impacts that they have to have per square? What is that number? Do you know?
Yes. So I'm pretty biased in this, and I will speak to my brand. And I believe we are one of the industry leaders in that we have the minimum amount of hits per 10 by 10 area being that square on your roof. And it's around 8 to 10 at the adjuster's discretion. I won't name any names, but there's a lot of insurance companies out there that run towards 16 to 18 and more.
You're right. And I agree with you. I'm not going to name them either, but when I do have a client that gives me a policy, I inform them of that, you
Yeah.
know, because that's huge. It's a huge difference. Imagine that you're talking 8 to 10, and somebody else is talking almost double the amount that it has to have. And these insurance companies have no problem saying, "Well, this part over here is not going to be considered, but we'll patch this part right here."
Right.
And imagine that. Imagine having a patch, right?
Right.
And that looks just horrible, on as you drive down the street. Here's your house sticking out like a sore thumb because you've got this brand new,
Yeah.
20-foot section, and the rest of it's,
Yeah.
all beat up,
Patch,
just horrible.
patch, patches on jeans are back in and they're hip again, but patches on roofs are never ever cool. I would say we should avoid those patches all day long. But
I would agree with you.
I would
I would
say
agree with
this:
you.
maybe you could have somebody on from a roofing company that's a trusted source for you, and they could explain. I don't want to speak to it because I'm not a roofing expert. I've just seen a lot of it, but maybe they could speak to when a shingle is hit with a hailstone. What's the process? What happens after that? How fast does that shingle deteriorate? And what did that hailstone actually do to that shingle? So even if you only have 4 hits per square, or even if you only have 12 hits per square, but your insurance company won't replace your roof, those consumers need to know what is happening to my roof now that I've had these hail
Right.
hits and that it's not being replaced. I know this, I can speak to, I know it accelerates uh, the wear and tear on that roof. I just can't speak specifically to how quickly and what the repercussions of that are long term. So maybe that's a future item for you, and I think it's
It
really
is.
valuable for
It is.
consumers to know. So
I've got some really good relationships with some top-notch roofing companies in the Metroplex, and that's one of my next ones is to have them come on because it's so important. Like I said earlier, two types of houses: one
yep,
that either has hail damage or one that's going to have hail damage. So,
right,
it's very important, and I think it's important that people educate themselves because we don't know. We
no,
just don't know. And the more information that we can have, the more we can arm ourselves with, the better when that process does happen, that we'll be able to navigate through that process effectively. You
agree.
know. So, Brett, is there any other things that you think would be, worth sharing for anybody who may be watching this as it pertains to auto insurance, maybe, or the home insurance, or just the process you feel would be valuable information to share?
Yeah, and I know you're limited for time, but one thing I would like to add before we leave is what we've seen, especially in the last 2 to 3 years, is the incredible amount, percentage-wise, of homes that come to us as new customers and are not insured properly. And what I mean by that is for the total reconstruction value of the home.
Right.
And a lot of people are emotionally tied to this, and so in a lot of cases, we as consumers are trying to dictate what our home is worth from an insurance standpoint, when we really should let that uh, number be up to the professionals, which are your insurance agent, not just my agency. I believe there are many good agencies out there that can help you determine what the value of your home is. So what I do is I remind customers that there are basically 3 primary values of a home that are important to consumers, and this plays into your industry as well. One being market value, and that's what someone can buy or sell a home for. A second one being tax value, and the third being the insurance value. Well, the market value, if it's my home, I want that to be as high as possible, because if I go to sell it, and I want top dollar for it, right? And then we move to tax value. Well, of course, I want that to be as low as possible because I don't want to pay the county and
Right.
the local schools too much. Which is kind of like they fight each other, right? Because I'm always saying, well, my house is, to my friends, I'm saying my house is worth so much, and then I tell the county clerk, well, my house is not worth that much, and
Right.
so I'm kind of fighting myself there. But what I do for customers is I draw a very, very thick line there, and I say, look, Insurance has nothing to do with either of those two things. Insurance stands alone, and I don't want that to be high. I don't want it to be low. I want it to be correct. Because when you have a fire, I want to pay 100% of that claim. I want to give you, Eddie, all the money you need to replace that house, especially if you got kids in school and you want to remain in that school district. Keller is a great example because we're kind of landlocked out here in Keller. And if someone loses their home, they want to rebuild it because they want to remain in the schools, and there's not much to rent around here. And we want to build that house, and we want to build it as quickly as possible, right?
Right. Sure.
And so what people miss when they determine, and some agents and some clerks miss this when they determine values on homes, is they miss maybe the tear down. Maybe it's a fire and there's a shell left and I got to tear it down and remove all the debris. Well, we just had a fire down the street. Wasn't my insured, but it was a friend of mine in the insurance industry. It was his insured. It was a $400,000 house, and they spent $80,000 to just tear it down and remove the debris. And now there's a slab just down the road from me, and they got to bore out all the PVC because some of that melted, right. And they got to prep the slab. Well, there's another $20,000 in prepping the slab. So now we're $100,000 into this house, and we haven't spent a dime to rebuild it yet.
You haven't even started.
No, I haven't even started. It's $260 a square foot was the lowest bid he got to reconstruct that house. And it's not a very high-end custom home. It's a custom home, but it's a very average custom home. And so he's on the fence, and he doesn't believe he has enough for his client at that point because building materials have gone through the roof. And I believe the insurance company, I won't name any names, but they just hadn't reviewed the reconstruction value in a very long time. And I think that's kind of where that fell through the cracks. And so, kind of to be facetious about it, you could ask a customer, which rooms in your house can you do without? Because now we got to build less house, right? And so, and I hate to make light of it. And like I said, insurance is not funny. It's not funny to these people, but they will probably wind up building less square footage than they had before because the value had not been updated. And I know we want to keep insurance premiums low. I get it. I understand it. But a few $100 versus a few $100,000, at least that question needs to be asked of every client on an annual basis. And so that because of inflation, COVID, all of the above, that all the hype right now, a lot of that's true. We're seeing that in prices of everything. And so I would say if your customer's watching this or buying a new home or whatever the process is that's brought them to this media, I would say if you don't do anything, call your agent and just review the value of your home as soon as possible because it's probably not been updated in a very long time. And if something happens, you'd be glad that you did.
Well, I know that you guys like to review the policy every year. You like to sit down with your clients and all that stuff, and at least over the phone. You've done that with me. You're always accessible. I know that you are a big agent. You're a monster agent in the community, but you're always accessible and you've always made time. So, I know that you've been my agent. I've been with Farmers for, I don't even know. I want to say 15 years or something like that. Mm-hmm. And I moved all my policies that I had with Farmers over to your agency. And I did that because, I believed what you were telling me was truthful and honest. I don't believe that you were trying to make an extra dollar on me for getting, whatever it may be. I believed that in your hands, you were going to make sure that not only I was covered when that call came in, but you were doing the right thing, right? It had nothing to do with money. It had everything to do with doing the right thing. And in my heart, that's what I have to believe when I'm dealing with somebody, whether it's insurance, whether it's a mechanic, whether it's anybody, I have to believe in my heart that they're doing the right thing. And, when I send people to you or, so many people around us were using your agency, and it's because that's how we feel. We feel that we can trust you, your agency. We believe in you guys. That's why we send our business there, because we know that, for, I guess, the wrong slogan, we know that they're in good hands with you guys.
Well, I appreciate that, Eddie. I really
Yeah,
do. We try and we believe and really if I could send a message for the agency, it would be, we are absolute givers first. We want to give information. We want to give knowledge. We want to give assistance where we can. And hopefully the byproduct of that is we build a nice agency and the byproduct is money. But we definitely try to keep that as an afterthought and as a byproduct of helping people. So just anytime, let us know whatever you or your clients need, and hopefully we'll be there.
Well, we'll do that. How does somebody get a hold of you, Brett?
We can go by email or we can go by phone. My phone number is 817-898-0388, 817-898-0388, or you can reach me at Brett, BRETT.Thill, T as in Tom, HILL, the number 2 at farmersagency.com. Brett.Thill2 at farmersagency.com. I really appreciate you having me on.
You bet. Hey, Brett, I thank you so much for your time. I know we're all busy these days, and for you to carve out this time in your day is, I'm very grateful for that. And, if anybody out there is listening or watching, please give him a call. He will take care of you. He's one of the best in the industry. So thank you again for your time. And if you ever need anything from me, you know where to find me.
Absolutely. Appreciate it. Have a great day, Eddie.
You got it. Thank you, sir.
All right. Bye-bye.